Hey everyone, welcome back to another portfolio update video on the channel. Portfolio is currently sitting at $7,556.21. We are up $77.93 for the day, $11.59 down after hours. For the week, we are down $133.86 or 1.74%. For the month, we are down $131 or 1.7%. For the 3 months, we are down $257.56 or 3.3%. And the year to date, aka the all-time, we are down $207.94 or 2.68%. So we had a little bit of a rough week, as you can see. We ended last week only down 68. Now we are down 207. So let's get into that. First of all, I cleaned out the trash. You'll notice that. So yeah, first big thing to note is that I pretty much, what I'm going to call it is cleaning out the trash, taking out the trash, if you will. I mean, look at my positions, guys. Look at my stocks. One stock. Look at my options. Like half the options I had in last video. So what did I do? Well, basically, guys, I finally bit the bullet and I'm like, I'm just gonna do it because I've been kind of dancing around it and I've been waiting to do this for a while, and I finally just was like, okay, we're just gonna do it. So I sold out of all my individual company positions and closed out any options that I felt were kind of garbage, and I did this on Friday, and I put every single dollar into SPLG. You can see my equity in SPLG is 7.5K. It lines up exactly with our portfolio value. So our entire portfolio is officially in SPLG, which I'm super excited about, to be honest. I've been wanting to do this for months, as you guys have known. If you've been watching for a while, you'll know that I've been dollar cost averaging into this for about 3 or 4 months now. About $50 a day, and we got up to 100 shares, but then I ran out of cash because all my cash was tied up in these stock positions. So what I did is I sold all of those stock positions and put all that money into SPLG. I bought 45 shares on Friday at around, I want to say 12 p.m. And I mean, lucky for us, you can see the market rallied throughout the day. So I bought all these shares somewhere around here for around $51.43. In fact, why don't we just take a look and see exactly what I paid for these. Okay, so we paid $51.44 for 45 shares, so $51.44, so yeah, pretty much right here is when I bought 45 shares. You can see the rest of the day the market just continued to grind higher, so that was great. We ended up making a lot of money that we wouldn't have made with just the 100 shares, so we bought in here for the remaining shares in our position, and the market kept rallying, so we'll take that. We made $75 today, which was really good because at one point things were looking pretty dismal, but then I bought those shares right around here, and then SPY just rallied throughout the day, so we got all of those gains, well, 7.5 grand worth of those gains as opposed to around 5 grand, so we got much more gains out of the rest of the day, and hopefully going forward. So yeah, guys, we're officially all in on the S&P 500. It is official. This is our long-term hold, and I'm just very happy that we're finally here, because for me, I know I don't show this in the videos, but having those individual stock positions can be very stressful at times, especially with companies or ETFs that you're really not too sure about. I know I've been saying this for a while. I'm really not a huge fan of MPW and LABU anymore, so I was looking to get out of those positions. At the start of this week, both of those were deep in the money on my call options. I believe MPW was around $5.50 and LABU was around $3.50, and my call options were at $5 and $3. So it was really looking like I was going to get called away this Friday, which is what I was hoping to do. So I was really excited about that because I was going to then take that money and put it into the SPLG here. But we did not end up getting assigned on those because on Friday and a little bit throughout the week, both of those stocks actually ended up tanking. You can see MPW is now at 418. So this is where we started the week, up here. 520 rather, so around 521. Once again, our call option was at the $5 strike, so I was like, okay, we're just going to get assigned this week and finally get out of this position. Nope, it wanted to hold on one more week, so you can see steady decline all the way throughout the week, and then a huge drop on Friday. So once again, we had that $5 call that ended up getting breached, or I guess out of the money, on November 7th, and it just kept falling all the way down to basically $4, and I sold around 12, so I sold somewhere around here, and I put all that money straight into SPLG. Same thing with LABU. Let's take a look at that. Similar situation. Let's look at the week. Started at 350, so was looking like there's no way I'm not going to get assigned. It was really deep in the money, over 15-20%. We had a little bit of fluctuation early on, bounced all the way back up to 350-ish, and then the tanking began. You can see Thursday 317. All the way down to 270. Friday, all the way down to 259 at one point. So we were far out of the money at this point, and I've been literally selling in the money calls on this thing for like weeks now, trying to get rid of it, and somehow they've never been hit, or assigned rather, and I don't know how it's possible, honestly, because it's literally just been me selling either in the money calls or at the money calls on both Labu and MPW for a couple weeks now, and they've just never been assigned. It's kind of crazy, actually, which would be nice if I wanted to own them for the long term, but the problem is I don't. I'm trying to get out of these, but I'm trying to get out of them through selling a call option, but it just was not working. So finally I was like, okay, we're just going to stop dealing with this hassle and we're just going to sell it myself. So around, like I said, around 12, I ended up closing out all my options that were tying up this as collateral. So I bought my call options back for a pretty big profit, because also I ended up rolling this Friday's calls, at least on MPW. I rolled, let's actually take a look at that here. Let's see. So yeah, we had this MPW call at the $5 strike that I was talking about here. I ended up closing this out, I believe, on Thursday. Yeah, so I closed this out on Thursday, and I opened this new one in the money at 450 for the next week out. So I opened a call option for 1 week in the future that was in the money on Thursday, and then of course Friday it just absolutely tanked, which is nice because we at least made 20 bucks on that, so we didn't have to close out at a loss, and actually it really helped us hedge a little bit on that big down day because we did make an extra 20 bucks overnight. However, I did end up having to close this out, obviously, so I could sell my shares. So if we go to MPW here, we can see, yeah, here it is, the limit sell for 417. So it's official. We're out of it. We're done with it. We're never touching this again. Sorry to anyone who may have invested based on the video I made 3 months ago when I was saying, wow, this looks great. Right around here, actually even higher, right here, I made a video saying, wow, this stock looks great. I'm going to buy 100 shares. And here we are. But, you know, at the end of the day, we're out of it. It's out of sight, out of mind. Don't have to deal with it anymore. And I'm just really honestly happy that I just don't have to deal with it anymore. It was a huge pain. Luckily, we did make a ton of call option premium. So even though it looks bad, you know, buying at 850, selling at 417, we made, I think, around $200 in premium and dividends. So really, it's not as bad as it looks, but it is still annoying. I think we probably closed for around a 30% loss overall. But yeah, at the end of the day, we're out of it. Similar situation with Labu. Let's take a look here. 3 months, we got assigned at, honestly, it was even higher than this. Right here. Assigned at 550 somewhere in July. So yeah, we were assigned somewhere around here at 550. It's done nothing but go down. So, you know, of course, I mean, I honestly thought this thing would never go below 4 because I had seen it bounce off of 4 so many times. But here we are at 270. So once again, you can see my limit sell for 261. We're officially out of it. You can see I bought back my contract here, and yeah, sold out of it. So we're done. It's gone. In terms of Key and T, I did end up closing those also, not because they were bad positions, but because I just don't want to manage these anymore. You know, I just wanted to get all my money into SPLG and kind of take a step back a little bit, if that makes sense, because, you know, even though these positions were good, they were causing me a lot of stress because you can see Key is very volatile. It's gone all the way down to 955 in this month, all the way up to 1150. So it's just super volatile and stressful for me to have to trade this and to hold this and to like open my portfolio every day, you know, not sure if I'm going to open to a giant loss or a giant gain. It's just, for me, having SPLG, or just everything in SPLG, it kind of gives me an idea that, you know, my money can't go down by more than X% every day. You know, like I know that because I know the S&P 500 and its sort of average moves. I know, you know, obviously economic events will trigger big moves, but for the most part, you know, this isn't going to move. Oops, sorry, alarm. This isn't going to move more than 2% in a day. So I don't have to be stressing all the time that, you know, oh, Key went up 12% today. Oh, Labu went down 15% today, because that's kind of what I was dealing with. And that's the main reason why I liquidated and put everything into here, because it's just, I know it's going to outperform anything I pick anyways. That's been my experience. I've never been able to beat the S&P 500 with my own stock holdings. So that's the idea here, is if you can't beat them, join them. We're just going into this. Less stress, pretty much no stress, no management on my end. I am selling covered calls, but that's really easy. I mean, 45 days out, just click a button and forget it. But yeah, it's basically no management, no stress. So it's much better, and it's going to outperform us anyways. So why not just buy it? You know, it's going to outperform us, no stress, no management. So that was kind of the perspective I took. But yeah, on Key, we actually sold for a huge profit because I originally bought Key at around $9 a share. Actually, let me make sure my alarm is not going to go off again real quick. Sorry about that. Let's see. Oh yeah, okay, I set like 8 alarms. Whoops. That's how I wake up. Anyways, let's see. Key. So we originally bought this at around $9.29 a share, I believe it was. We bought 100 shares at $9.29. We've been wheeling it for quite a few months now. We made, I want to say around $70, $60 in premium and dividends. So our cost basis was somewhere in the mid 8s. If you remember last video, I think it was 863 was our cost basis. So with that in mind, 863 to 1093, that's a pretty big gain. So we ended up selling this for pretty much a couple $100 in gains. And you can see that reflected here. We sold 100 shares at 1097. So yeah, good stuff here. Closed that one out for a huge profit. Similar situation on T actually. You can see once again, closing out the call options here. Made a pretty big profit on this call option because this was one I had to roll out pretty far and it fell quite a lot because of the drop in T. Then there it is, the 100 shares at 1553. And obviously it's bounced since then, but we made quite a lot of money off of SPLG today, so I think it makes up for anything that I might have missed out on. But yeah, no, once again, huge profit. I believe our cost basis was somewhere in the mid to high 4s, or 14s rather. So we were able to sell this for a pretty nice gain, even though at one point it looked pretty bad. But yeah, so that's nice. So we sold 2 of our positions for a pretty big gain, and then 2 of them for a pretty big loss. All in all, here's where we're at. We're down 200. So that's just where we're at now. It's all in the hands of the S&P 500 now. I'm still, obviously, guys, I'm going to keep selling options on the side. The whole idea of this strategy is that I'm holding the S&P 500, but I'm using my margin to sell cash secured puts because it doesn't charge you interest, and I'm very good at selling puts is what I've found over time, is that I'm very good at selling options. I'm not good at picking stocks. Hence why we're doing S&P 500 and selling options, if that makes sense to you guys. So that is the thinking here, because I clearly don't have the most reliant track record on picking stocks. I think the only reason the stocks I pick are poor is because I have to buy stocks that have such a low price so that I can wheel them and sell options. So I think that kind of out of the gate leads me to buy some bad stuff. So yeah, I mean, obviously if I had like a $50,000 portfolio and I could wheel Apple and like Amazon, of course it would probably be miles, millions of times better than wheeling, medical properties trust at $4 a share, but that's just the problem with having a small account, is I just simply cannot wheel these quality companies. Hence why we're going to be selling covered calls on the 500 best companies in the United States. Boom, there you go. That is why we have the S&P 500. I still love selling options, hence why we're going to be selling options still. So in all, nothing has changed. The only thing that has changed in the portfolio and going forward is I don't have a ton of individual stock positions. That is literally the only thing that has changed. We're still selling options, we're still collecting premium, and we're still buying stocks. So yeah, end of the day, not much has changed. But yeah, let's take a look at this position actually, and more in depth rather. You can see we have a market value of 7,500, which is just crazy. Honestly, looking at this number in one holding is just really cool to me in a weird kind of way. We have an average cost that is pretty low, 50.63. Obviously we're way above that, and we have a total return of $160 in gains, or 2.2%, which is great. Obviously it makes up my entire portfolio except for the little bit of short options, and we have 145 shares currently. Hopefully we can get that up to 200. That would be nice. Then we could sell 2 covered calls, and I would like to stagger the strikes if I do end up doing that, but I also would like to have an odd lot at all times. That way, if we somehow breach our call options, we will still make gains. And obviously the call that I did sell is miles out of the money. You can see it's at the $54 strike, which is pretty much, yeah, it's above the 52-week high for the entire market. So, if we were to get up to here, then we would make, $300 on our 100 shares, and then another $150 on our extra 50 shares. And if it kept going past that, we would still be making money on these 45 shares. So if we were to somehow get assigned on this, boom, well, I would end up rolling it. But if we were to go in the money on this, then we would be making a ton of money. So I would be fine with that. But that's the idea, selling these very far out of the money calls after huge market rallies. I sold this one at the end of last week's rally. You can see, let's go to the month. Yeah, I sold it like right around here. So after a 7% rally, I think that's a pretty appropriate time to sell a covered call, especially considering it's at the 52-week high. So I think it's an incredibly safe play. If we actually go into this position, you can see it has a delta of 12. So there's a 12% chance that this even goes in the money at all. So yeah. And let's see what else we got. Oh yeah, like I said, I closed out some of the dumpster fire positions, aka the Ford put that I had opened. In fact, why don't we just analyze that real quick? So I ended up losing money on the protective put that I bought and on the cash secured put, which is kind of crazy. So you came with a $72 net loss on that. So this is really why we want to be trading spreads as opposed to just cash secured puts. This is another great example. If we had bought a spread, our max loss would be around $34 in the worst possible case scenario. But instead, we're here sitting with a $72 loss. We literally could have basically paid maybe $5 and it would have capped our max loss at like 30 bucks. And we still would have been entitled to a ton of premium in comparison to our collateral requirement, which is why we really want to be selling put credit spreads and rolling them into cash secured puts instead of starting with a cash secured put, because you can get situations like this where the stock price pummels and you lose a ton of money. In my honest opinion, I think it's so much better to just open with a cash secured put. In fact, why don't we take a look at what that would look like? It just puts you in such a better position to roll in the worst case scenario, and it really protects your downside. It lowers your collateral requirement. There's really no downside to selling a put credit spread to open as opposed to a cash secured put just to start off, and then you can eventually roll it into a cash secured put if you end up going in the money or you need to. But let's just take a look at an example real quick. And you could be way more aggressive too with these put credit spreads, is my kind of opinion, is that I like to sell at the money. If it goes down, then I can just roll. So I feel like you can be much more aggressive and still get a nice premium. So let's do a quick example. You could sell the 950 and you could buy the 9. And look, we're making $12. So we're still making over 1%, almost 1.5%, but we're only risking $38. So if Ford goes down more than 8%, we're covered all the way down to 0. So if Ford has some terrible news and it drops to like 8 or 7, we're not on the hook for that. We're only on the hook for $38. At which point we can simply sell our long position for a profit and roll our short position for a credit. And then at the end of the day, we're still making money in the long term, So this is, honestly, I think this is a great system, and this is really something I'm going to be adopting for every single trade. As you can see, I don't have this employed quite yet, except for these put credit spreads. But that is the plan going forward. Obviously, these are all unprotected puts, which, by the way, this key put is still at full profit. ET is at full profit. I opened a new cash secured put on SoFi at the $6 strike, which is currently at a loss. But I think, obviously, I don't think SoFi will get down to 6. If it does, I may actually consider assignment, because 6 is a really good price for SoFi. But you can see it has an 18 delta, so we're chilling there. But let me actually give you a really good live example of why this whole put credit spread idea is just so good, such a great idea. So let's take a look at this example here. And I've gone over this in previous videos, so I'm sorry if you're seeing this again. But I opened this on 10.11. Let's take a look at what the price was on 10.11. All right. There, boom, 862. So SoFi was at $8.62 when I opened these spreads at the $7 strike. And look at how it's fallen. It's now at $6.89. So we're deep in the money on this put. So if we were to just sell a cash secured put, let's actually take a look. I have 2 of these spreads. If we had just sold these cash secured puts and we didn't buy the long leg, let's see how much loss we were in. Boom, $64 of loss. And at one point, this was way worse. You can see these are valued at $119 at one point. So you can imagine if we opened for a credit of $35 and we opened 2 of them and it went to $119, we would be down about $180 on our short position. But here's what's really good, is our long position is helping protect us. You can see our long position is up $20, and at one point, I mean, this thing was up, let's see, 88. At one point, we were up around $120 on our long position. So we're making profit on one of the legs while also protecting ourselves. That's what's so great about this. So currently, obviously, this is pretty deep in the money, $6.89. So we would be on the hook for like, what, $60 per cash secured put. But because we did a spread, look at our loss. We have 2 spreads that we opened when the price was $8.60. It's currently $6.80. So the price of SoFi has fallen by 25%, give or take. And we're only down $46 with 2 spreads, which is just insane. You can see we opened for a credit of 11. It's currently priced at 34. If this were a cash secured put, we would be getting wrecked right now. But because we have this insurance and we made it a put credit spread, we just have so much opportunity now to roll and to make a gain on this long leg. So like if we want to roll, we need to roll for 34 cents or above. I mean, we can just take a look here, go out 45 days. Like here you go, that's a full credit, and we roll all the way down to 650. So our strike price goes down by $1 and we're getting a credit. You know, so that's just it's just such a good system, in my opinion. I just feel like it's so much more risk-free than just a regular cash secured put. Obviously, I still really like cash secured puts, but I think honestly, just because of the collateral and because of the risk, especially if we're just going to be holding SPLG, I think I'd much rather do spreads just to keep my risk lower. So yeah, that's the plan. So basically, this is what we're going to do. Also, one more thing, I have a reoccurring buy setup. So we're basically putting $10 every single day into this, no matter what. And if I don't have the buying power, it's going to pull from my bank account because I'm basically going to be contributing $50 a week to this portfolio minimum, probably a lot more than that to be honest, but that's the minimum. So we're going to be putting all of that back into SPLG every single day, going to be dollar cost averaging until hopefully the end of time. But I mean, you can see like if we just dollar cost average over a long period, we're pretty much guaranteed success, you know. So that's why I think this is so great. So that's the plan. Buying a little bit of SPLG every single day. We're going to be selling put credit spreads also on the side based on technicals and rules. What else? So yeah, buying every day, all in SP 500, and still selling options. So I really like this plan. I think it's great, and I'm very just happy now that we're just in SPLG because it's really taken a lot of stress off of me. So yeah, we'll see how it performs in the next portfolio update video. And yeah, thank you for watching. I'll see you in the next one. Goodbye.